How do you negotiate a fully diluted clause from the investor's point of view? In another video, we explained how to negotiate a fully diluted clause from the founder's point of view. Now, we will do so from the investor's point of view. Firstly, investors, generally venture capitalists, angel investors or family offices, aim to maximize their return and minimize the dilution of their ownership in a liquidity event. Their focus on fully diluted calculations centers on protecting their pro rata share and limiting the impact of dilutive instruments. Secondly, a key objective is to minimize the size of the option pool. The employee stock option pool, or SOP, is one of the main sources of dilution in the fully diluted base. Investors often push for the option pool to be created or expanded before their investment, meaning pre-money, which dilutes founders and common stockholders more than it dilutes them. Thirdly, the investor must try to ensure clear fully diluted calculations. Investors want the term sheet to explicitly state that the pro rata share in participating or capped participating liquidation preferences is calculated on a fully diluted basis, including all convertible instruments such as warrants, convertible notes, and so on. This avoids ambiguities in the distribution of any economic rights in a liquidity event. For example, if an investor has 40% ownership as converted, but the option pool dilutes their stake to 36% on a fully diluted basis, they will want to ensure their liquidation preference and pro rata share reflect this basis to avoid surprises. Fourthly, the investor will try to protect themselves against future dilution. Investors can negotiate anti-dilution provisions, such as weighted average or full ratchet, to mitigate the impact of future share issuances or option pool expansions. They may also demand preemptive rights or pro rata rights to maintain their fully diluted percentage in future rounds. In short, firstly, the investor must push for a clear cap table. They should demand a detailed capitalization table that shows fully diluted ownership before and after the round, including the impact of the option pool and other convertible instruments. Secondly, they must negotiate an option pool shuffle. They should insist that any increase in the option pool is done pre-money to protect their ownership. And thirdly, finally, they must review convertible securities. They should ensure that convertible notes or safes are converted into shares before the fully diluted calculation to avoid unexpected dilution upon an exit. Focus your queries and challenge our AI Atenea. Complex questions, expert answers. More information at ilpabogados.com.